All right, what's up, guys? Hope everybody's well. So I'm gonna try to not make this week's call too long. Sometimes I feel like the runtime is a bit too much, so I'm gonna try to kind of breeze through everything today. I do have a couple of trades, and then I do want to get into case studies. So, first things first, I want to go over what I showed on the broadcast channel on Instagram, just simple before after. This was my first AUDUSD sell of the week. Hold on, let me make sure everybody's good. All right, good. Um, so before, after, pretty much the gist of the setup was a pre-London sweep of Asia high, and I was also looking at this point of liquidity here. The reason why this is very important to me is because if we look at where am I here? Right. If we look at all of these mitigations here, 1, 2, 3, 4, 5, 6, 7, you just see a lot of mitigations present. And this is something I haven't really brought up too much over the past like year or so. But if you have the book, you guys know that this is weak order flow. So weak order flow, typically when you have a lot of mitigations and we don't have really big impulses to the downside, like let's say a mitigation downside, rather than that pretty much big expansion after one mitigation. You see various mitigations giving, right, very unsubstantial new lows, right? So we're seeing a lot of mitigations here. So I'm kind of seeing this as liquidity. And this is obviously where that weak order flow started. So I thought this was pretty significant. But more importantly, right, if we zoom in, my setup, excuse me, was that we swept our Asia high. This is my Asia zone. And as soon as we had swept that Asia high and we swept that liquidity, more importantly, we had the transition here. And by the transition, right, I'm referring to the fact that we had this internal low that created the high that took liquidity. That internal low is taken, right? And as soon as that's taken, right, although it is technically a CBOS, the one of the main things that I like here in this situation is the fact that we have a potential type of structural disruption, right, internally here, right? Because obviously any kind of wick high, any kind of candle high is some sort of high internally, right? So you guys know that when it comes to the sweep, right, whenever we have the sweep, we do want to take out liquidity, but we also want an internal transition. Without that internal transition, then I can't really justify this going to the downside. And also we're coming into our London Open. So once we come into our London Open, right, we swept Asia high, we swept liquidity, we had an internal structural disruption, and right, I kind of just use that zone, right, as a pretty much an area of mitigation to then continue lower, right? And my stop loss here was a bit aggressive. Like it was a very aggressive if I'm being honest here, because actually, I think, yeah. So the reason why I use this was because thanks to the structural disruption, right? If we're breaking this high and then this high then takes out the internal low that created the impulse to take out liquidity, because that is then taken out, and because this high then takes that out. And obviously, once we have the internal break here, then this is solidified as a high. But if I wanted to be conservative, right, I can definitely justify this or using the full invalidation and not just the POI invalidation. So um yeah, so traditional sweep model here, and I'm obviously aiming for Asia low, but this actually ended up going way further, right, as you can see. But I don't really mind that. I know that my model, right, I'm looking for an internal model I'm sorry, internal model external target, right? That's kind of what I'm doing with every single scenario, right? I can obviously hold longer, but then it's a question of how much volume do you hold, right? And so rather than thinking about partials or trailing my stop, I'd rather just aim for a specific target. And then once I get that, usually take my full volume. Um, And the only time that I kind of changed that is kind of something I'm looking for with the implied sweep. And I'm gonna show you guys that with this gold example later. So simple trade here, traditional sweep. We take out Asia high, we take out liquidity, we come into London open, and then I get the impulse to the downside. So trade number one, traditional sweep. Funny enough, the next day on GU, I got the exact same setup, a variant of a sweep, right? A variant of a sweep here, as we can see, coming into then, right, the low or the previous low here, previous structural low, sorry. And this actually ended up hitting within like 30 minutes. Um, the reason here is pretty much identical, right? If we're looking at direction, we see that we have clearly we are bearish here, right? And if we're bearish here, then I'm looking for some type of CBOS or some type of break into the upside to get fuel to then get us to, much lower pricing. So based on this scenario here, I am taking out that Asia high, just like I did with just like I was looking at with AUDUSD. And this one was actually a bit more aggressive, if I'm being honest. But the reason why I like this setup more than AU was because obviously it's London session and I preferably want to look at euro and pound during this time rather than AUD USD. I like to take my AUD USD trades during the Asia session. Um, so right? We're obviously taking out Asia high here. And like the previous setup, we are taking out, right, the low that created the high that took liquidity. So once that is confirmed here, then I'm kind of just seeing this as an unsubstantial new high. And I'm also seeing this as potentially, right, a sweep into the downside. So my entry was actually based on the inefficiency. Like there's actually a very, very small inefficiency here, if you guys can see. Very, very small inefficiency, right? Because I obviously could have justified, waiting for that POI, but just because I want to make sure that I get in the trade and not necessarily potentially miss it. Like let's say this hits the 50% of the inefficiency and then it doesn't give me that full fulfillment of the inefficiency. Like I am not gonna risk missing out on this trade with such a small move. So I have an inefficiency move here. That is the entry, and I have to use my full invalidation today for this setup as my stop loss just because there is no structural disruption. So there is no solidified point internally here, right? So if there is no structural, I'm sorry, there's no solidified point up here, then I can't really justify this um, to take, let's say, the POI high rather than the full structural high. So pretty much identical setup. And this one actually went way further. Way faster, sorry, compared to AUD So same setup, different day. Same setup, different day, different pair. And I think that is all for what I showed in the channel. Yes, it is. So I do want to review um a couple of trades. I'm actually going to come back to um that gold setup. We'll go over that gold setup at the end. So this is my only loss of the week. And this one I didn't have that much conviction in. And then this is also one of those conflicting things on whether I want to include a certain rule or not. So when since I've been building the implied sweep model, I've been kind of just 50-50 on how I want to potentially take profit, whether it's take the full TP full or take the full TP with no partials, or my second option is to take a partial at the equilibrium. And this was actually a perfect example of seeing that equilibrium be hit without me getting kind of a without me getting the full delivery. But before that, let's actually get into why I took this trade. Wait, wrong one. So, I was looking at this as a CBOS. So CBO, oops, wrong button. Sorry, guys. So I was looking at this as a CBOS. We had a CBOS come into play. We had a bearish engulfing, as we can see here. So I kind of anticipated it to be a implied sweep. But the only thing that I did not like here was one, the time of day, and two, the fact that we had a buy to sell literally right above where my entry was, as we can see here, right? We have a very clear buy to sell, but I ended up taking the risk anyway, even though it was technically outside of my kill zone session. This was like a bit about like 30 minutes afterwards. Um, 15, 20 minutes afterwards, actually. And I just said, you know what, I'll take the risk. It's okay, and we'll just see how that goes. And I ended up seeing that we got to the equilibrium here, right? We actually almost hit stop loss there, and then we hit equilibrium, and then we hit stop loss. So my issue here, I think, the biggest issue was definitely the time of day and the fact that we had that POI in place, and I didn't have the conviction that I normally would have with another setup. So as you can see, this setup was outside of my kill zone session here. And we then created equal highs. But fortunately for me, I actually ended up taking an extra scenario. Uh, I ended up taking risk twice here for the before and after, just because we had taken out equal highs, we had bounced off of the buy to sell. Obviously, we are clearly bearish, and I had actually misread this. I had actually thought that we had engulfed on the 15-minute. Right, I actually thought that we engulfed this candle here, and if we would have engulfed, then that would have been pretty much a textbook, um, a textbook implied sweep. But I guess that mistake ended up paying off because I thought that this would engulf, so I'd actually just press sell right at the low of this wick, and this ended up just hitting TP overnight. Like I had actually fallen asleep right after that, since it's like 4 in the morning my time at this time. And but yeah, for the most part, the conviction came from sweeping equal highs. Obviously, we are directionally bearish, and we are now bouncing off of right the buy to sell that created that impulse, that bearish impulse to the downside. So um I believe there is a engulfing here on the M5, but this wasn't enough for me just yet. I didn't have the conviction here, but I guess that kind of contradicts because that's actually how I took my gold buy yesterday. But I didn't have enough conviction on this M5 engulfing, and I actually wanted to wait for that M15, M10, but the M10 didn't give any kind of engulfing since we had the 3-pin pattern, but ended up working out. And this was about a 1 to 4. So usually with these sweeps, I'm seeing about a 1 to 4 minimum. And it's been going pretty well, honestly. Like sometimes I'll get a little bit higher, like this was like a 6, but then like the GU was a 7. Yeah, it was a 7. So yeah, that concludes that. And then last trade I want to review is this is an implied sweep on gold where we saw a the implied sweep. And the reason why I had more conviction here, I'm actually gonna show you guys that really quick. Right, I actually did take this outside of the Asia kill zone, but the Asia kill zone I primarily use for AUDUSD. Gold, I don't really have a preference for the time of day in terms of when to trade this because I actually kind of see setups like all day long. But what I really liked about this setup, right, was the fact that we're obviously still bullish for one, right? Clearly we are bullish here, right? We do see this as a bullish impulse, and we do have a CBOS here. I'll get back to your question after I complete the review here. So we have a CBOS, but obviously, whenever we see a CBOS, right, we do anticipate price to continue higher, right? We always want to force a continuation to the upside. And my reasoning for the CBOS to then continue higher. So obviously, if we take out the CBOS here, if we do create the CBOS here, internally here, we have to be bearish, right? Because we need bearish momentum in order to take out a previous low. So obviously here, I have to anticipate, right? High, low, retracement, continuation, right? And it's only up until here, excuse me, um, it's only up until here where we had a low be solidified, but also we did have order flow disruption. So if we have order flow disruption here, and that then breaks the POI here, then I'm also looking at this as unwillingness because we have solidified this low based on this break because this is the range internally. And this is now unwillingness because we are unable to take out a previous low with pretty much before we had the solidification here. So on top of that, I did see at the time of the day that we have a lot of momentum come into play. So if we have a lot of momentum come into play, then I now see this as a range to play off of, right? And the issue, or right, or something that I know I'm going to get a lot of questions over is how do you know which range to play? Um, so the reason why I'm using this range here, right, is because this is where the momentum started. So this is where the momentum started, but also, right, at the time of this, while this is playing out here with the pullback, right, I'm actually not anticipating this to be a sweep, right? I'm not anticipating this to be a sweep. I'm more so anticipating this to potentially be a continuation to the upside. Excuse me. I'm more so anticipating any kind of POI continuation, but here I didn't see any type of model. There is no model here. You can potentially argue the potential OFD here because we can see that there's a bearish reaction, then that breaks. But as you guys know, there's three things that could happen at a POI: the open, the 50%, or an LG of that move. So if we are taking liquidity here and then we are also engulfing, right, then this is not a break. This is not order flow disruption. If we were to have given a bigger push to the upside, then we do have order flow disruption. And then I can kind of just take, right, the sell to buy to, right, potentially create new highs. But unfortunately, that's not what we got. So once we got the reaction here from this internal high, then I'm kind of not even entertaining the possibility of this sell to buy, right? And if I'm not anticipating that, then it's really just a waiting game. And I only drew this range here after I had seen the implied sweep here. So we have a solidified low into solidified high, right? And then we're kind of coming into that extreme discount. And the reason why I had a lot of conviction here, I'm gonna give you guys, I guess, just some free sauce today. This is one of the variants that I'm working on with the implied sweep. And if you're here, congrats. Because one of the variations here is when I have, right, a potential solidified low, but I also have an internal sweep here, right? I have an internal sweep and an external sweep. I call this the dual sweep, which is going to be one of the variants for the implied sweep model. And it's pretty much when we have, right, obviously the external low be taken, and then we also have an internal low be taken. Plus, I really like when the engulfing candle takes out the previous candle and takes out the previous level of liquidity and then engulfs, right? That's one of my favorite engulfings. So we had the dual sweep, engulfing, implied sweep, and this was my reasoning to buy. And I'm obviously aiming for, technically I should be aiming for, right, the range high, but because I knew that we were bullish externally, right, I thought it was fair game to aim for that external high here. So if I would have taken the original TP, it would have been about a 1 to 6. So like I said, these sweet models usually tend to be about a 1 to 4 plus. But I was lucky enough to get about a 1 to 8. And this one actually could have been justifiable to even hold this a bit higher, right? So once I do release this stuff, then it's now your guys' job to either decide whether you're going to just take the immediate target, or if you can combine models within models, then you can also aim for external highs. But yeah, other than that, are there any questions with the dual sweep? That's actually the first variant that I've ever actually said publicly. So what do you guys think about that? I call it the dual sweep. I have 4 variants so far. There's actually a second variant to the dual sweep. So technically there's 4, but really it's 3. Right? Do you teach all this in your YouTube course? Yeah, so the YouTube course, um, the original course that's like from like 2020, and then the updated course was like 2022. But if you want the cheat code and in terms of like saving yourself the time of having to watch all the whole course, then you can kind of go to the Discord or our public Discord here, um, and get the ebook. If you get the ebook, That kind of is like the cheat sheet that kind of just shows pretty much everything outside of the sweep models. It's pretty much everything that I've talked about besides the sweep models. That the sweep models are going to come out with the second book, which I've already completed all of the info. I just need to get more chart work and more live examples before I finish that. Um, but yeah, that would be answer to that. Do you enter after it, right after it gets engulfed? No, at the closure, because the closure would confirm to me that we have the engulfing, right? Like if we're like actually with GU, there was actually an implied sweep too, I believe, with the cell that I took. I believe it was on M10, unless I'm mistaken. Was it this scenario? Yes. See, so like this is another implied sweep. This is like the traditional one where we are taking out Asia high, and then we have the engulfing, and then we're kind of aiming for right a previous low. So if I was to have taken that, right, obviously SL at the high, it's not SL at the candle, it's always SL at invalidation, because since the model itself is extremely aggressive by default, like why not have the invalidation unless you maybe have like a potential SD internally, which would have a solidified point. But this is kind of like the gist of the model. It's about a one. This is about a 4.6 where you have the sweep of liquidity and the engulfing. And I'm usually, I tend to see this, I tend to like these from like M10 plus. I usually use like M10, M15, M30. Um, and yeah, I always take the I always take it upon the closure because sometimes like you kind of just see these like kind of just go and they don't really come back, kind of like the gold one did here, kind of like the gold one did, right? So this is when I bought, and then obviously it never really came back, right? It did a little bit of a pullback, but it never really came back to the entry. So that's why I take it based on the open, and then that's also why I take the invalidation as the stop loss. Because what if with the moment you see it getting gold, but the candle has not yet closed and it just wicked overall? Yeah, you always have to wait for the closure on this one. Always have to wait for the closure. That's why it's called implied sweep, because you're implying the sweep with the engulfing, but you can't confirm the engulfing until the candle closure. Facebook. So we don't wait for a comeback to the buy. Well, the thing is that it can, but it doesn't have to. Like it can come back, yes, but that doesn't mean it's going to. So I'd rather just be secure, right? Because if we look at that AU example or GU, sorry, example, like here, you can see that there was enough time. Like there's actually like some type of movement here, and that's why also I was able to take the traditional sweep move, which was technically still a bit aggressive. But because we had the implied sweep, that's also just more confirmation for me. So yeah, I always take it on the closure just because we don't know if this is just gonna go or if it's gonna stay for a little bit, right? Like here it stayed for a little bit, but then over here, right, it just goes. So um yeah, that's the theory behind that. Cool, but any questions, concerns with that? Yes, no, maybe so. Hope that makes sense. Does that make sense? Yes, no? Makes sense. Cool. So before we get to case studies, I guess just one quick announcement. I don't know if you guys remember, if you guys been following the announcements, but you guys know that there are a couple projects that we've been working on. Let me see if I can actually find it here. I'd have to kind of scroll up, but I'm actually going to show ASIV progress after the Zoom today. But I would have to scroll through here. But if you guys see one of our early announcements, I forgot which announcement it was, but pretty much I'd said, everything that we were working on, which was the implied sweep book, which is the Endure Playbook edition 2. I was working on the free fundamentals course. I'm also helping build the all the ASIV bots. I still don't know how I want to go about that. Right now I'm still kind of just getting a lot of data. If you guys want to even check that out, here it is. That's the vein. Everything's been scaling up quickly. So if we go to actually the Instagram, I showed like an update like last week, I think. right? So this is last week, 535%. And I think right now we're like almost at 600. Right, like let me refresh the page. Yeah, refresh an hour ago. Yeah, we're almost at 600%. So this has been scaling up. We've actually been incorporating like two new strategies, and they've been working out really well. So this is still in the works. I don't know how I want to go about this, but I still do want to get the data. But more importantly, when it comes to uh the free fundamentals course, I was gonna make like a whole presentation and then like videos over it, but like it's a fucking hassle, like if I'm being honest. So what we're gonna do, I'm gonna just make an ebook out of it. I'm making an ebook out of all the information with the everything fundamentals, and then that's with anything fiat, anything crypto, et cetera, et cetera. And that's 100% free. Like once that's done, I'm gonna make like a small video covering it, and just give you guys that book for free, just so you guys can start studying up on fundamentals and stuff like that. And other than that, I think that's it for the announcements. Let's see, do we have any case studies today? But yeah, this is still scaling. Can I send screenshot in Discord? Yeah, go for it. Go for it. Go for it. Go for it. Excuse me. Let's go one at a time here. Okay. Oh, I keep doing that. My bad, guys. My bad. Keep doing that. Okay, this not OFD, right? Like we mentioned earlier, three things that could happen at a POI: the open, the 50%, and the LG of it, right? And how we determine whether it's a break or not, I don't want to go based on candle closures. I want to go based on intention, right? A big move to the upside. Like if we had this move inverted, but here bullish, then I would consider that to be order flow disruption. So because we have the liquidation and in a pretty much an LG of the POI, then that is not OFD, not OFD. Did you send? Am I seeing this correctly? These are
Yeah,
two
yeah,
different
yeah,
charts, bro.
yeah.
Yeah, yeah, yeah.
It's wrong. I don't know why would happen when I copy it from
Oh,
TradingView.
okay.
I'm
All
trying
right, let
to
me see.
recover it.
All right, you know what? Let's just get them together.
Yeah.
GG. Okay, that those are good. Um, okay, yeah, those are good. Those are good. One, two, one, two. Yeah, I guess it was just this one. But does this end up being a winner?
Yeah.
Okay,
Small one,
yeah.
but
Hmm. Yeah, so here I would disregard the OFD, but more importantly, you do have solidified point here up into the range. We do have a mitigation here. That is correct. And we did kind of break here, but that is, even though this is a liquidation, a unsubstantial new high potential sweep, it is a bullish structural range. So even if you were to even do your fib there, I'm pretty sure you could do like a 71 fib here. But I do like that you waited for the internal transition. This is actually LGC here. So with the LGC, then that's a good trade.
so that's not a OFD, right?
No, no, because three things happen at POI. LG 50% open,
Okay.
right? Like if we have OFD, I would want something like this after the move, right? Like if we go to my gold trade, where is it here? Right, POI, reaction, follow through, impulsive move, OFD.
Okay.
Uh, okay, so this looks like a sweep, kind of like a sweep. But the structure's still bullish, so I think it's a bit aggressive. I think you might be a little early, even though it could be correct. Um, okay, yeah, ended up being correct. Very nice. I like that. Honestly, I really like that it took this wick low out. I think this is kind of what's giving the movement here. If this wick would have sustained itself, then this would have probably continued higher. But because you broke this wick, because M5, if you go to like M1, I'm sure that's like an internal structure break. And I think that's what's giving you that movement to the downside. But this is actually a sweep model because you took out this high, right? And then you could, depending on how the structure is internally, this could be like a SD internally. And so, yeah, this is potentially a sweep model. And yeah, that was good. I like the TP. That was a good TP.
Thank you.
But I will say it was a reversal because it is technically a bullish break, low, high, retracement, continuation, TP.
Okay.
Okay. Okay, I like this. I like this. Personally, I would have even sold here. I'm not opposed to selling here, if I'm being honest. I would have that would have been a good entry there. The reason why is because usually I don't like to see a lot of mitigations, right? Like I want to see one or two mitigations, which is still this is still considered like the second mitigation, and then from there kind of give you the bearish move.
Okay. The first one entry, I don't know. I wasn't like fully how to say not aware, but I was kind of scared because
Mhm,
I thought that usually after like a comeback so much, when you come back like so fast, I'm like, okay, this one like could go even higher. So I went
mhm.
like a little bit and then got the
So
entry.
the conviction should come here, right? So this is why we have the DLE, right? Direction, bearish, liquidity. So we have direction, the map, liquidity, the gas, the fuel, the petrol, and then execution is the vehicle to get us from A to B. So we have the map. We know that we're bearish, right? This is the liquidity aspect of it because clearly we always need some type of liquidity to go into one direction. And we know that we must go one direction to then go the other. So because we have this sweep here, I think this is enough conviction for me to even potentially say that we're going to come down here because this is internally bullish. And then it's unsubstantial new high, right? And we have high momentum.
Okay.
So that shows intention.
That one up there, like after the sweep, it's
Yeah, see. Mhm.
Unwillingness also. No?
Sorry.
This one right here, it's also like unwillingness.
Unwillingness, no, I would call that a sweep.
Okay. Okay. Just a sweep. Okay.
Unwillingness is if we didn't take it out, like if it was like this.
Okay. Okay.
Excuse me. But yeah, you see what I mean? So this is enough conviction for you to aim for here. Like this is one of those setups where it could really be very profitable. I don't know where your POI is though here. It's like a M10, M15.
I don't know. I don't remember to be honest, but I think I just aim for an efficiency.
Mm-hmm. Because this was actually because I think my sweep was here when I sold.
Yeah.
And let me see actually. Was that here? Yeah. So here. Yeah. So let's see here. M10, maybe. M15. Um, yeah, I don't know, but it worked out. So I don't know where that POI is though.
I
But I
took
do
just
like that.
the inefficiency basically. There's no like buy to sell zone to be honest.
Hmm.
Like it's more bigger. So what I
Hmm.
just it's the inefficiency like
Hmm.
to reach
And it
and
mhm. And that's okay because since we're taking this low out, that solidifies this high. So that means that you can use that as a SL. So it really doesn't matter why you enter as long as you enter, but your invalidation is here, which is good. Yeah, here. So this is solidified because of this break. And if you don't understand why, if we zoom in, right, you can see here that this here is this here. So this is a low that created that final high. That's taken out. That solidifies the high. So however you enter from here, SL above this. So that's good. But yeah, this one you could have definitely stretched out. You could even stretch that out to the external low here for sure. Okay. And this one, I like this one. I like the idea because we're bullish and we're taking an equal low, sorry. And we technically have an internal sweep here, LGC potentially. So I like it. Personally, I would have probably taken the entry here. And then I think it's fair to even aim for up here, or at least here. Here because it's equal low, I mean equal high, sorry. And then here because the external high. And we're technically still bullish. Okay, so we lost here. So yeah, like I said, I would have entered here, right? And this is conflicting, and I would have probably put my stop loss here if I'm being honest with you. But this is where it's conflicting on whether or not you're gonna manage your trade or not. Because if you take this, right, then you solidify the low, right? So if you solidify the low, then it's fair to make this a short stop, right? But at the same time, maybe you want the entire leg to be taken out, which is here. So I don't know how you do it, but this is one of those things where, yes, in hindsight, we could have potentially had a short stop, but is this approach like consistent is like the main question. But yeah, I'm not opposed to this. I guess the issue now, since I see this loss now, I think I would say, yes, we're externally bullish, but we did take out the CBOS, so technically we're internally bearish, right? So technically we should still be looking for this to be taken. So for example, here, this type of situation, if this engulfs, maybe I'm looking for like a sweep here. When was this today? Yesterday? No. Wednesday? Wednesday?
24. Yeah, yeah,
Wednesday.
yeah. I
Okay,
was
let's see what
looking also
happened. Uh-huh.
for sweep, but I
Uh-huh.
didn't. I think it didn't go.
Uh, let's see. This is actually a good sweep here. This is a reversal sweep. I don't know if this actually gave an entry though, but that's besides the point. So the 24th, that was am I blind? Was that here? Was that here?
I think so. It was 11 for me, but I don't know what time for you. I
So right
think it
now it's
was.
12. It's 12:30 for me right now. Yeah, it was here. Yeah. So this just to me shows the that you're in the wrong direction. Wrong direction as a whole. Um, because we're still technically bearish. And yeah, you know why I sold here, but the issue with me looking for the buy, um, like let's say you're looking for the buy here, is that this is externally bearish. So I'm always looking for, so although this may be bullish internally, I'm still looking for a transition up here because we're externally bearish. And even if I don't get the high here, right, once we break here, like even if you get your loss there, honestly, that loss can be a confirmation as to why you should be taking the opposite direction. And you probably could have gotten an entry. Let's see. You probably could have gotten an entry. Yeah, you probably could have literally where your entry used to be. So this is OFD, right? This is
UFD, yes,
OFD.
exactly.
OFD because we have the reaction, then we pulled through. And then it really just depends on then how you would want to enter. So it could be like a Fibonacci, right? 70%. Or it could be based on the buy to sell, or maybe there's a POI.
Yeah, I was
Maybe.
thinking about it, about to re-enter the trade, but I didn't want to rush because usually it's like I'm taking a loss, I'm putting it again
Mhm.
in, and I'm taking a double loss. So on that day, I was like, okay, one loss, it's fine. I will deal with
Mhm,
that.
mhm. Yeah, I usually limit it to two max per scenario. If not, I'll just either stop for the day or I'll go look at another pair.
Yeah, then for me at the moment it becomes difficult to stop.
Mhm. Let's see. Um. Oh, okay, so you sent it in Discord. Did you just send it over here? Okay, that was Tam's old trade. Oh, you have an ultra wide. Okay. What is it, like a 49 inch? If you could do me a favor, if you can, is this that chart? Okay, much better, much better, much better. It's better to always send the trading view link just because it automatically formats itself to my screen. So let's go ahead and I'm gonna have to open this wide for this. Just 1 second. So did you mark this correctly? Uh, OFD? No. I think we saw this in the chat. This is a structural disruption. So that the person who said that that was structural disruption was correct because technically we're low, high, retracement, solidification, and then that is unwillingness break. So it's a structural disruption. Orderflow disruption is based on a POI. Like, is there a clear OFD here anywhere? No, I don't see one here. But this is in SD. This is the wrong model, and that's correct. And I like that target. That's an excellent target. Internal model, external target, right? Because once you sweep liquidity, you don't know what can happen. So that's good. Um, so here, right, this is where you have unwillingness because you break this. So this solidified low is unwillingness based on this low. And from here, you do have that move. And then this is actually, what is this, gold? Yeah, this is gold. This is where I took my buy. And actually, very nice. You actually waited for the conservative move. So this LG, this is where my implied sweep was. But here, I would not, don't overcomplicate it. Like, just use the sell to buy. You can use either this sell to buy, or you can use this sell to buy. Like, no need to complicate it. Because this is more than enough for you to then aim for like this high. Because the thing is, the reason why you can aim for a higher or a deeper TP is because you're having, right, the bearish to bullish transition, right? Because clearly we're bearish and then it transitions into bullish at this arrow. That's what transitions you into bullish. So once you then get the entry, you're literally catching a transition, right? Which pretty much started the move. And if we go look at gold, that's why we saw this big expansion to the upside here, right? That's why you saw that big expansion. So if you would have even taken that scenario here, like let's say you're being conservative, right? And you can then aim for, right? That's already a 1 to 4, right? In my opinion. So if you can get anything above a 1 to 3, I think that's excellent. Um, but yeah, I would say this is good. This is a good start. I would just not complicate it with the POIs. That's course one stuff. Course one stuff. I really try to only focus now on sell to buys, which if you don't know what that is, sell to buy. So that in and of itself is a POI. And then obviously there's the internal sell to buy as well. So yeah, I think that's it. Discord. Yeah, that's it for that. Okay. Okay, 1 minute, 3 minute, 15 minute. Okay, you measure 3 different time frames from the entry. Delete this stuff. Okay, so I'm assuming this is the entry side. Okay, so this is the entry. It looks like So I like this because it technically looks like OFD, unless I'm mistaken here. OFD, because we have reaction and then we actually broke through. Excuse me. So yeah, it looks like the entry decent, decent. Um, but the bias, okay, that's not enough info. Okay, here we go. So, um, you're within right a sell to buy region, and you're then looking for the confirmation to buy. So I'm not opposed. I'm not opposed. Okay. See, and then so this is exactly what I had told the early what I said with the earlier example is what are you going to do when you manage your position? Like are you going to let this break, right, signify to you, right, that we're going to try to stop, or are you just going to take the loss? Because in my opinion, right, the execution is good. I'm not opposed to the execution because if anything, it looks like you might have been wrong directionally, externally. Because yes, there is an impulse here, bullish impulse, but we are still technically bearish. You know what I mean? So this is that conflict of direction, whether you either want to trade, right, an internal move continuation, or you have an external bearish direction, and then you look for the internal bearish transitions, right? So that's going to be kind of like a big realization that you have to make is, am I going to worry about the external, the middle, or the internal? Right. So if we have like, let's say this is your, let's just say this is level 3, 2, 1. So usually, right, if level 3 is usually always going to be correct because obviously higher time frame is technically um bullish. I mean, it is always technically correct, I'm sorry. But um if you have the middle time frame and you have the internal time frame in alignment completely, then usually that could probably override the external. But unfortunately for here, level 2 is the only level that's still bullish. Because here, as you can see, right, we're still technically internally making lower lows. So if we're still making lower lows, then the internal is going against you. The second level is bullish, but the external is bearish, right? So you really only have one level of structure in your favor, right? Hopefully that makes sense. Um, if this wants to load, hello? Okay, here we go. Oof, I don't like this. I don't like this one. This looks like a reversal. Clearly we are bearish here. CBOS, when we're looking for CBOS, we're kind of looking for the continuation. I don't like that. Okay. Yeah, honestly, I don't like the bullish here yet. I think I would look for a bullish move with the break here. The reason why I don't know if this worked out or not, but it looks like we have bearish order flow still intact, right? But let's see if this worked out or not. Let's see. Let's see. Yeah. See, so I still don't like the buys here. I mean, yeah, I don't like the buys here. Um, the main thing conflicting me is the fact that we have, right, CBOS. Why is this a CBOS? Because it's the high that took out the final low. CBOS continuation. Right. So I'm still anticipating this to go lower. One, two. Are these the same trade? Is this trade going on right now?
No, it's not.
Oh, no, it's not. Okay.
It played out,
Uh,
but I think you showed it earlier. I didn't get the full PO, like I didn't get the full target hit. I we reacted off a bullish, I think an engulfing candle, and we went bullish
mhm.
after that. But I got the internal target hit.
Yeah, I really like this trade only because this. I really like that. I really like the liquidity because this liquidity is kind of dictating to you where the market wants to go, and then you kind of just take the continuation after that. Like this is like I have high confidence, I have high conviction on this type of entry. I don't know if this is a model. I guess you're kind of using the sweep here as a base because if you were to have traded this, then you would have kind of had to have this perimeter, and it's a pretty big perimeter. But I guess this is kind of just a typical order flow continuation trade, if you guys know what that is. That's like old. I don't really use that model anymore.
I
Yeah,
don't
that's
know.
essentially just playing the order flow, right? That's an order flow
Yeah.
entry. I
Hmm.
Yeah,
use I mean I
Like,
do the same thing with NASDAQ. I'll just if I'm late
yeah.
on the initial move and my conviction's high, it's an order flow entry. I mean it could kind of invalidate the order flow with an order flow disruption, but you'll know if
Hmm.
you're wrong and
Hmm.
you can reverse your bias.
literally what it
Yeah.
was. Yeah, I got that higher time frame. Once I saw that engulfing candle, we went underneath that on the higher
Hmm.
time frame. Because I was late. I wanted the first entry when I first saw the break because I saw the liquidity grab and I saw it as a liquidity grab. Everything
Hmm.
else externally told me bearish.
Hmm.
Um,
Hmm.
but once we had that engulfing candle where you were at, and we had order flow on that second one after already going bearish, that was like, okay, I definitely wanted to take it from that 50% and keep going lower.
Hmm. Hmm. So this ended up playing out, right?
Yeah.
Where is it? Where is it? 0.6594. Yeah, this yeah, this definitely played out. Definitely played out. That's somewhere around here. Am I mistaken? Here? Or am I mistaken?
Um,
9
Looks like it to
p.m.
me.
yeah.
Yeah, looks yeah, so that ended up hitting. So that's good. It's just the only thing about the taking these immediate continuations, I'm looking for like an immediate level of order flow. I mean, an immediate level of liquidity. I want to get out the way because the problem with not catching a high is like you don't know when stuff is gonna pull back. So I don't want to sell here even though it's pro trend because out of nowhere I could get a CBOS continuation. So I would definitely like to take this out or kind of look for the first external target. I don't know if it's this low or if there's like another low, but I would like to kind of get out of these trades quick. So usually that model though, it's kind of just I haven't used that model in a long time, honestly. It's pretty much just using a different model as a frame, and then you're just following the order flow based on it. So like I just say here, right, we consider this a sweep, and then we give the impulse to the upside. But then I'm just kind of looking for right the mitigation continuation. But yeah, that's overall good. I like it. I like it. But I just need you to know that this is where your conviction should lie here. This is very key, very, very key.
If I could ask a question on that, then
Uh-huh.
so I got the initial liquidity grab. I got signs of order flow going down, and then I got that second liquidity grab where you said that was where my conviction should have came in. Do I want that entry somewhere within that box once that I think you could see it. We had
Yeah, yeah, yeah. But what do you mean the first LG or the first which was
liquidity
the
grab
first one? Yeah, which was the first one?
on the higher time frame where I put like all the way in that top left corner by where the symbol is, where it says LG,
Mhm.
like up to the left a little bit
Oh,
more.
here. Hmm.
Yeah. So I could understand. That's why I really drew the POI. Understood that's where my conviction should have came. But more so in terms of like finding an entry there was where the hard part, I guess, for me came in because we did get heavy momentum to the downside, but we didn't really come back to that box I drew. I said I was continuing to go lower, and then I pulled after the CBOS. And the
Uh-huh.
RBOS was nice, but I also understand what you mean by saying I could have got another CBOS that could have wiped me out on that trade as well.
So when it comes to this isn't where the conviction should lie. The conviction lies here. Because yes, you could have the confirmation, but internally it's just still bullish. So like this low, I'm still anticipating this low to take out this high. And it's until we sweep that and then create the internal break. That's where I have unwillingness here, and that's what's giving me the conviction to go lower. So
Got you,
you can have the bias from this, but your timing is here.
got you.
Right. Forgot I didn't take the earlier shot before it played out. Um, okay. So okay, so you're seeing it um you're seeing an LGC model, I'm assuming. Right? I'm assuming you're seeing an LGC model here. Is this what we're looking at? So I need a little bit more context. I need to know why you have the bearish bias. Where is this sell? Like, let me see if you're selling at a discount. When was this today? Was this today? Yeah, this was today. Okay, let me see. So you sold, I'm assuming here, unless I'm mistaken. Right? Can somebody point me? I'm blind. I don't see. Where are we in price? 1.335. Oh no, I'm looking at the wrong pair, guys. I'm sorry. I'm blind. I'm so sorry. Okay, here, that makes more sense. Okay. Yeah, so this is I'm gonna just make it super simple for you. It's not that the model is wrong. It's not that your direction is wrong. Literally, just zoom out. And I kind of I marked this line purposefully because it's actually a bit off. But you just swept a daily low, right? This is why I don't like to take immediate continuations after we've taken out liquidity. That's why my goal is to take the liquidity, not to trade after that. And if I'm trading after that, then I'm trying to trade away from it, right? So, for example, if you go to my let me see my gold trade here. So obviously here, if I'm looking at the liquidity being swept here, right? If I'm seeing liquidity being swept here and my narrative is bullish potentially, maybe even disregard the narrative, right? It's more so like a timing thing. Like if I'm seeing, right, that we are sweeping liquidity, right, and we didn't create a substantial new low, then I'm not looking to sell here, right? I'm not looking to sell the immediate continuation, right? Because if I have, right, a potential sweep on a substantial new low or the internal liquidity grab, then I'm using that as a frame to trade away from it, right? So like if you go to GU, right, after we swept that daily low there, is exactly why I didn't even look at GU yesterday, if I'm being honest. If because we swept this low, and you can see that we didn't create a substantial new low, like we kind of just swept it, right? We swept it, and then we broke the internal structure. So if we broke so we sweep, and then we have structural disruption, and then we break the high, then I'm probably looking to buy, right? I'm probably looking to buy off of the sell to buy here, right? Like if we're looking at the sell to buy here, then I would look to try to buy somewhere here. And you can see like you're actually bouncing off of a perfect POI there. But this is like a hardcore reversal. Like I'm just saying that's what I would have done, but I'm not saying that I probably would have done that in real time just because I don't like um it's semi-conflicting because I know that this is extremely bearish, but I know we just took a very important point in liquidity, sorry. So I know that this type of entry would be high risk, but it does come with high reward potentially, depending on how you find your entry, right? Because if you can read the narrative in that way, you see the structural disruption here after the daily sweep. right, and you break, right, the final high that takes out the low of that liquidity, then if you find an entry, whether it's based on a POI, whether it's based on a sweep model, right? Because it looks like there's probably an M30 sweep, implied sweep here. Okay, no, it didn't engulf. It didn't engulf. Okay, but yeah, it didn't engulf. But there was okay, no, I didn't sleep the low. So no, I probably wouldn't have found an entry here. But I just need you to know that the single reason why this did not work is because you just swept the daily low. And if you just swept the daily low and you don't create a substantial new low, then you usually want to try to get away from it. Sorry. That's kind of like the gist. But yeah, you got to note these levels, right? We got to note these levels. Okay, so any questions, concerns, any more case studies? Do we have anything in the Discord? No? Any questions, concerns? I barely look at the external of externals. I mean, like the like I always hear like different opinions on like whether or not you should be um using top-down analysis, but like the issue is like fractals, like everything is a model within a model within a model within a model. So like every model has some type of importance. It just depends on right what essentially you're looking for, what kind of model, what kind of time frame, et cetera, et cetera. Um, so I'm not looking at the daily for direction. I'm more so just looking at the daily to see if we're like aiming for a daily low or a daily high, right? And in terms, not in terms of the candle, but in terms of the structural range, right? So from here, right, like I'm personally like just because we swept here, right? I am more so not trying to be continuing bullish yet. I'm more so here based on this daily. I want to take out this daily high, maybe come into the POI and then go lower, right? But that is the daily time frame, right? Maybe that may not influence as much on the internal time frame, right? Because if we consider what I just said here, then if we were to take out that daily low, the daily high, right, then that gives me a potential area to aim for, right? Like here, that's a potential area to aim for. So I would then look for like my intraday time frame if I'm an intraday trader to then find a transition and aim for that high. And then after that high has been taken, then right, maybe now because we have taken liquidity here, because this is a solidified point, so we have liquidity here. So maybe once that is taken, then maybe we come back into a POI. Let's say we have a transition and then we have the move, then this would be a valid entry for the end for kind of like the swing POV. But then it's now a question of how deep do you want to go? Like, are you a scalper, intraday trader, major intraday trader, swing trader, etc. So I would pay attention to things and just take things with a grain of salt, but more so try to see where price is gonna go. Like, what is the next area of liquidity, right? Like, if we were still trading here, then maybe you can trade all the way down here, but based on model rules, based on my model rules, like I said, when I was selling here, I'm only aiming for this, right? Even though I'm leaving technically this on the table, I'd much rather get my quick 701 here because I know that probably on the daily or the external time frames, we're probably going to aim for this low. And how do I know we're going to aim for this low based on here? Because we have this break. So that means this is unwillingness to continue higher. So if we're not going to take out a high, we're going to come to get a low. Right. So just kind of use it just for direction and liquidity. But with execution, it kind of just depends on the type of trader that you are. Yeah, hopefully that makes sense. But yeah, any more questions, concerns, guys? Anything new? Let me see, how's gold doing? Oh, nice. This is still going. That's crazy. This is still going. That's crazy. This is such a good trade. Such a good trade. This is like textbook. Like, can you please show an order flow disruption? I didn't take any order flow disruption status, bro. All right, now I'm like really the only two models I use now for the most part like for entries is like OFD and sweeps. But in OFD model, let's just let me find something quick. Yeah, that would have been here. Like this is excuse me. Excuse me. Right, this would be orderful disruption, right? And then like I said, we had like I said earlier in the breakdown, right? We're um kind of looking for right the sell to buy, and then we're looking for a transition here. So I would more so want to see order flow disruption here, give a big impulsive move, and then look for the buys. But I haven't taken a. Actually, let me see. I'll pull one. I'll pull one out from the archive. Let me see. OFD. I think I have this one. Yeah, here, perfect. This is one from I think last week. I don't know if I showed it on Zoom though, maybe. Right, so this is OFD. Can you see it? Do you see it? Yes or no? Does anybody see it? Do you see this? If you see the OFD here, right? So the reaction isn't the best, but it's still valid because if we zoom into like M1, I promise you there is right a move to the upside. So the 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 confirmation for OFD, right, is actually you kind of want like a full reaction. So like here in A plus OFD, an A plus OFD would be essentially if we came into the POI and then we took out this high and then we broke. That would be like the ideal A plus OFD, right? Maybe when it doesn't do that, we could call it like an implied OFD or something like that. But and when that implied OFD is there, then right, I still kind of need a little bit more information, like a little bit more data to then continue
If this,
lower.
hey Freda, if this breaks low, maybe it could have been an OFD. This,
Yeah, yeah, pretty much, yeah. That's like that
if
would be the
this,
A plus
if
OFD.
this breaks.
Like I'm pretty sure there's one. I'm pretty sure I could find one here quick. Guess not. Guess not. Guess not. Guess not. Yeah, I don't think so. Yeah, I can't find OFD. Excuse me. But yeah, hopefully that makes sense. Let me pull out another. Let me pull out another one. Maybe I have a better
Maybe this
example.
right here. If you're
Hold on, give me.
using the sell to buy.
Hold on, give me one
I
second.
was looking at that. No, it's not. It is, but it's not.
Hold on, I'll just perfect, 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 perfect. This is one from I think 2 weeks ago. So the OFD is here. If you guys can't see it, the OFD is here. See reaction, impulse. So here you kind of have two models. You have two models created in the frame. So obviously we are bullish, right? It's like ideal sweep here. Ideal, ideal, ideal sweep. This is actually another variant too, but I'm not going to get into that. But this is a using the sweep here, right, as a frame for the trade. So if I have, excuse me, right, if I have the sweep here, right, plus I have the OFD, then I have a very high conviction setup. Why? Because we are technically bullish. Um, And if I really want to be very conservative, like my entry should be here, SL should be here. And this is one of those like 3x my risk type of scenarios because you have a sweep in OFD and you're directionally favored, right? Directionally favored. We took the liquidity based on the sweep, and we also use the sweep and the OFD, right, as frames to give us the timing to then potentially go higher. So even though the RR may not be the best based on that type of scenario, but these are the scenarios where you can really up the risk with conviction. But yeah, hopefully that makes sense. Yeah. OFD. Cool. Any more questions, concerns? Anyone? Can you make more examples of implied sweeps? No, that's gonna be in the book, bro. It's gonna be in the book. I'll show them if I trade them, but I'm not gonna make examples.
Does the book have more examples of OFD?
Yeah, it has a lot, bro. It has a lot. Does anybody in here have the book? Anybody in here have the book?
Yeah,
I'm sure
me.
they can answer that. Yeah. I'm sure there's a lot of OFD examples that I have in the book.
Yeah.
Okay. Okay, I'm not opposed. I like it. I'm not opposed. I just don't like the POI. I don't like the POI here. Like, I don't know. Maybe it's a different time frame. I don't like the POI. But you can also argue structural disruption, right? This would be like a structural disruption. Yeah. So based on this break, once we break here, that's structural disruption. So no matter where you take your scenario, this is your invalidation. But it is technically a counter trend, so I would probably look to aim for like up here, like maybe here, the buy to sell. Right, either that is a target, or if you're actually looking for this, maybe this is externally bullish, then I would more so like to trail my stop, right, as we come here, because this is a buy to sell. So like, yeah, I don't see this. I don't see the POI. I don't see how that's valid. But there is structural disruption, right? Structural disruption in opposing LG compared to the direction. So a bullish LG when the direction is bearish. And there's actually like a sweep here. There's actually an implied sweep here if you see it. There's an engulfing. Not one I would trade, but just noting. The wick. Yeah.
Did the wick go into an efficiency?
No, it did not. Wait, which one? Here? Oh, actually, let's see.
The one around the
Yeah.
entry area.
Yes, it did. Ah, okay. Yeah, no. Then okay, then yes. Then I would agree. I would agree. Aim for this. It's just an example. Like I would aim for that for sure. 100%. Would have aimed for that. 100%. If I'm taking this scenario here. Why? Because this, right? This is like an example of a range, right? This would be like an implied sweep, if there was like an engulfing here. But you can also consider this a traditional sweep after if you're buying here. This is a traditional sweep model. So if we're taking liquidity from the downside, then I'm looking for liquidity on the upside.
So the LG, I mean, I'm labeling it as liquidity. Maybe it's not an LG. It's a sweep because you're sweeping a solidified low, internal low.
Yeah. I wouldn't consider that a LG.
Okay. And I just did that really quick because to give you more context of why the bigger picture of why I took that one.
See, like this is a LG
And this one
here.
is live. And I
That's
did
an LG
so
right there.
I kind of mix it with my own. The horizontals are like my own models, but
Mhm.
big trim was what I just took. And I do trim out of NASDAQ. So
Big trim.
yeah, I'm like majority of the position. Like I'm already so close to full take
Oh,
profit.
okay. Like you
that-
trim the position. Oh,
Yeah,
like
like a
big trim
big,
is that like the
yeah.
name of
Sorry,
the model?
a big scale.
I was
Yeah.
like, that's a weird model, man. But yeah, see, like this would be an LG here.
Okay.
So that LG would have confirmed this sweep, and that would have been a traditional sweep. And then obviously you aim for here.
Yep.
So if you want to just buy here, then you probably have like a 1 to 4, 1 to 3-ish. But yeah, that's good.
So I'm sorry, go back to that. When did you consider that first break? The
Here, this
mm,
because this is the internal low, I mean high that took out a low. This is the internal structural range, the ones that's taken. And then
okay,
to confirm
this
LG.
one. When did you consider this a sweep? At what point is that solidified sweep
Once
with
you have
with
once you
this?
have the break of this.
Sorry, you can delete mine.
Yeah, once you have that LG confirmed. So technically this would be a structural disruption because you're internally bearish and you have a bullish LG. So it's structural disruption. That's why you're able to buy here.
Okay.
So let me zoom in. Okay, I can't zoom in. Oh well. But yeah, because obviously like no matter what, even if you have like the potential of seeing a sweep, this has to be bearish for that to occur. So this is bearish and that occurs, then you need to transition internally. And so like CBOS, right? Once this breaks, technically this is solidified. So if you want to be way more conservative, I guess that would happen there. But yeah, but in hindsight, I would say just the LG.
It's funny. That's exactly what I did consider it, and I kind of took this whole deal here, and you can see where I took
Uh,
this loss this morning. I can erase that because that's ugly.
yeah, you see this one, I would have only liked that if you're like buying here. Like you're kind of just buying at a premium here. And
Definitely
this is
buying the
what
premium. Agreed.
all time highs here.
No, it's pullback.
Oh,
So,
okay. Oh, true.
but I could
Because
probably
this is yeah, like depending on the context too, like this could also be like a range, and this could be like an extreme premium. So if this gives me a sweep, LG or something like that, then I can then aim for here and then here.
okay.
But yeah, that would just depend on the context externally.
And that's actually, I mean, what you just marked up is kind of happening live.
Oh, really? Let's see.
Yeah.
What's this?
And I
What pair is
yeah, I
this?
completely agree with this, and
US
I didn't want to share this one because it's not, I mean, this was completely
US.
forced, but I'll share it anyways. And it's
Uh,
hideous structure. Like it's really messy, but again, it was kind of my kill zone at the time. I wanted to get it. Fridays are usually not, kind of poor price action for NASDAQ anyways, especially with news voids. But
what's this? What's the symbol for this?
this is I think just NDQ 100 or NAS 100. I used the one we're looking at is Pepperstone.
Pepperstone.
Yeah, NAS 100 Pepperstone.
Yeah, I see. So yeah.
And
Would
there's
it
a
be
lot of
bearish on like
mess with
just
that link
yeah?
that I just sent was the actual trade I took, but I didn't want to share it as a case study because I know it's not there's absolutely no model. The structure was messy going into that. You break highs, you break lows internally.
Yeah, usually if you feel like you're
Really
forcing it,
worst
it's not really
scenario.
worth the time.
Right. Right. And I actually the risk reward model is wrong there. I took this close.
Yeah,
And
and honestly,
I trimmed, but again, I went break even pretty quick because I know it's forced on that break. I know you can probably look to short here.
mhm. Yeah, probably. Like I would have
And
probably
that's kind of
bought
what's
like
playing
here.
out. This short right
Yeah.
here is playing out kind of right now. So
So you see, so whenever you see this inverse play out in the future, that means that up until literally here, up until this, you were correct directionally.
yeah,
So not a total loss.
not a total loss, but yeah, I agree
Yeah.
that it's too messy to really waste my time with.
Oh yeah, it is. It is working. Yeah, I see. Um, yeah, it could actually work. Might actually work. But it's what like 3 hours away from close. So.
Yeah, it's no kill time. But you can even see if you zoom in on the 1 minute, there's a little sweep that just took place. with
See,
that
so
wick right there
here,
in the center.
this is the important part here. Like whether this either continues higher, I would much rather see that go higher, take out relative
Mhm.
equal highs, than maybe give an engulf, and then kind of aim for bare minimum like discounts, like let's say minimum here, or even down here.
Okay.
Just because if we do have that sweep, then let's say we break like the structure point, then this is now unwillingness too. So that means that we're pausing the bullish and coming bearish.
Yep. Cool. Thank you.
Um,
Appreciate it.
yeah, no worries. Cool. Any more questions, guys? Any questions, concerns? I feel like everybody's starting to get it. Everybody's kind of a little bit more coherent with the ideas. That used to be something that I used to struggle to explain. Like, it's really hard to explain to someone how to have a trade that's coherent, a trade that I can read. Because if I can read it, then like you have some type of idea, some type of process, some type of system. But yeah, it looks like everybody's pretty coherent these days. Allows for better discussion. Yeah, of course. Yeah, yeah. But yeah, mind you, like we are like what, year 7 now? Anybody here's been here since the IML days? When I first started trading, I started trading like 2017, 2018.
I was actually referred to RCV by somebody who was in IML the same time as you. They
Who?
actually had great praise for you.
Who?
My cousin, he referred me, but
That's
um,
crazy.
but he literally I think he said he was with somebody named I think V.
Oh, he's with
Forgot.
Trade House. He's with Trade House.
Yeah, and
Yeah,
that's
yeah. Me and Jordan are good friends. Me and him talk still. He wants me
and
to join his company. I'm like, no, I'm like, no, I'm good, bro.
yeah, he
But
was like, the only way I'm gonna let you join or to even see about it is if you do it through people who actually care about the process.
hmm
So he literally the only people he like would say pay attention to and put me on to like with coffee and theories and stuff like really early, and I would just follow. I was
uh,
following before Enduro actually.
mm Because what Enduro was what, like 2 years ago now, 3 years ago. Who the fuck
Hmm.
knows at this point, bro? If I'm being honest. I know the anniversary for RCV because it's 2 days after my birthday. Found you through Azura. Oh, that's cool. That's cool. Azura. Haven't talked to him in a while. I don't know what he's been up to. He's been MIA. I haven't talked to him in a while. I still speak of solidified points. Oh, that was you? Are you the one that's are you the one that said that a couple weeks ago? Like maybe like a month or 2 months ago. Somebody said that exact same line. Like he talked about solidified points and then you typed in solidified points on YouTube. Somebody literally said that like 2 months ago. Oh, okay, that's you. Okay, okay, okay. Um, because yeah, after I finish the second book, I want to do like a brand new like revamp market structure guide. Like I want to make like a little presentation, make a video on it. Cause low-key the video is outdated as fuck. And I don't like rewatching my own videos. I don't like listening to my voice, so I just redo it and then leave that old one as it is and then have like all the new stuff now. But yeah, any more questions, guys? Anything else? Still working on my indicator too. I'm actually trying to add something really cool. No, not that one. Yeah, these points are fucked up, but I'm trying to add this to like my main one. You guys can see like structural level, current bias, stuff like that. Maybe make it a little bit bigger. Except for welcome. Yeah, I mean, really, it's all now just time. Everything is so fucking tedious, man. Like writing a book, guys, that's just irritating. Like the first book took me like 6 months to make. I'm not even lying. It's like 6 months. But like this one, I already have like all the notes down. But now it's just getting live examples and getting all the wording. But yeah, if we have no more questions, concerns, I think we can wrap it up. But yeah, this has been scaling quick. Like this was getting fast actually. Like it's technically like 200%, but like it's weird because like if the balance right now is at 16K, then a 1% increase is like way more than 1% on here because the original balance was 10K. So it's gonna scale up way quicker. That's how like compound effect works. But yeah, hopefully, I want to get this to 1,000. If I can get this to 1,000%, that'd be cool. That'd be so cool. But yeah, other than that, if you guys have no more questions, I think I can wrap up for today.